Now 2025 is going to be a very interesting year and there's going to be a lot of volatility. We expect this segment to reach $375 billion. UPI transaction value reached $200 billion in December 2024. We expect all of these trends to be strong in the next year. Hello and welcome everyone to the first video from Team Wright Research of 2025. Now 2025 is going to be a very interesting year. There are so many things happening in the market. There are many things to be worried about, many things to be positive about. But one thing we can be sure about in 2025 is there's going to be a lot of volatility. We are starting this year with slowdown in earning, a slowdown in growth. I think in the recent earning seasons, we are not going to see maybe a lot of exuberance in terms of numbers, but the outlook is improving. We will see rate cuts happen. We will see the budget come up with new announcements. We are seeing rural segment grow at a faster pace after a very long time. And the India's growth story will continue to present us with multi-baggers in one sector or the other. So in this first video of 2025, instead of focusing on one sector, what we are going to do is identify the key sectors that could, give us potential multi-baggers or potential high growth stocks in 2025 along with the reason why. So the first sector where we could see potential high growth stocks or potential multi-baggers is the healthcare and the hospital segment. We've already done a video explaining the opportunities in that segment, but in essence the healthcare segment in India is going through a robust growth trajectory, indicating a growth rate of 22% from 2020 to 2025. In 2025 we expect this segment to reach a potential size of $375 billion. After COVID, the awareness of health has increased with the growing and aging population as well as rising incidences of lifestyle diseases. Hospital and healthcare segment is seeing a lot of demand. And you can see so many projects being launched by private hospital chains, especially in the tier 2 and tier 3 segments, which will lead to potentially higher revenues and higher earnings for these stocks in the coming few years. The government after COVID has also put a lot of support on the medical infrastructure segment, and the pharmaceutical industry, which is growing at a very fast pace, is also supporting this particular segment. So in this expanding segment, you have a lot of very interesting stocks. So in the healthcare segment, we've seen some very strong stocks like the Krishna Institute of Medical Sciences or Rainbow Hospitals or Vijaya Diagnostics, which are, some very, very high momentum stocks in this particular segment. In the medical manufacturing space also, we've seen Polymedicure as one of the stocks that has seen very strong momentum in the last 1 year. And you can see that stocks in the hospital and medical devices segment are shining out as potential multi-baggers of 2025. Now the second big segment that we think is going to shine in the next 1 or 2 years is the agrochemical and agricultural ring stocks. The agrochemical segment is essential for growing the agricultural productivity in India. And as you can see that the focus of the government and the focus of the policies have shifted towards welfare over the last 6 months. You have seen increased budgetary allocation to the agriculture segment. You've seen states spend a lot on welfare. You've seen very robust monsoons, and you are seeing an upsurge in rural demand as well. So all of this hints that the agriculture and agrochemical segment is going to have a good time in the next 1 or 2 years. We have also seen the agrochemical exports from India rise at a rate of 9%, whereas the domestic market has only grown at 8%. With the China +1 policy in place, right now China is the biggest supplier of agrochemicals to the world. Indian agrochemical manufacturers have a potential to grow in the global markets as well. We are seeing in the recent times that the government is refraining from a lot of capex, right? They're not spending a lot on capital expenditure, possibly to reduce the deficit. But the focus has still been there on the agriculture and agrochemical side, and budget 2025 in fact could be a trigger to see a rally in this space. But we have to be assured that we know of the flip side as well. So this particular segment has a lot of dependence on the monsoons, as well as China is a formidable opponent here, which can have these dumping policies where they put out material at a very low cost. So that is also something that you have to be aware of. So in the agrochemical segment, you would have some very interesting stocks. For example, Deepak Fertilizer is a stock that you must be seeing, is one of the potential high momentum stocks. You're seeing PI Industries, again excellent stock in this industry which has been doing really well. You're seeing smaller stocks like Supriya which are doing pretty well in this space. Now let's talk about the third interesting segment where we see a potential growth happen, which is electronic manufacturing. You've seen stocks in the electronic manufacturing space do well throughout 2024, be it the early part or the later part. India's electronic manufacturing industry has big hopes. They aim to reach a potential size of 500 billion by 2030, and this growth would need a lot of expansion, and this could address the $400 billion deficit that we have in electronic exports in India. And with this growth that is expected, India could generate 12 million jobs in this industry by 2030. A key fact, in fact, is that the electronic manufacturing industry reached $100 billion size in 2024, especially growing on the backing of the PLI schemes that are boosting this segment. You can have a look at the key stocks like Dixon Industries and Amber Industries. Each of these stocks, in fact, have grown their order books by 25 to 30% in the last year. Obviously, India has a huge demand for smartphones, and with the growing urban population, the growing wealth in the country, you are seeing increasing demand of obviously mobile phones from the India's growing population, and also the white goods like AC, TV, fridge, fan, etc. And you're seeing the manufacturers in this space actually do the best. The manufacturers in this space are seeing increasing growth in their order books and are meeting the highly inflated targets very consistently. Along with the growth in home devices due to the rise in urban population and urban demand, what we are also seeing is an increase in EV demand, right? So EVs across India are getting more and more demand, and you are seeing companies like Dixon also foray into EV component manufacturing, which will again give another boost to this industry. So 2025, we expect it to be again a great year for companies in this industry as well as the manufacturers of these consumer durables and electronic components in India. The only risk here could be potential pressure from imports as well as pricing pressure from the global market, but I think the government of India policies would still be in place to boost the Indian electronic manufacturing. The key stocks in this space would be obviously Dixon. In terms of industrial manufacturing, you can look at Cummins, Amber Industries, again a manufacturer of white goods, and PG Electroplast, which has been a big favorite of ours across our portfolios. And the next industry we are highly bullish on is the IT-enabled services industries. So the IT-enabled services industries is supposed to grow at a pace of 10 to 12% in the next few years, with the rising adoption of automation as well as AI tools across the industries. So here we are not talking about the big IT firms, right, which are highly dependent on the global markets and the global manufacturing. We are talking about companies that are catering to the IT-enabled needs within our country. The big market drivers here are generative AI, right? The use of generative AI is growing across the board, and different platforms, services, and companies in India are making more and more use of generative AI in their workflow. Secondly, the BFSI segment is going through a digital transformation. So banks, insurance firms, AMCs and different players are now becoming more and more digitized. And you are seeing digitization companies in this space, for example, CAMS or Fintech, which are usually platform plays that are enabling tech for this industry do really well. So the rise of digitization in these industries is also driving growth for IT-enabled companies. Finally, SMEs have an increasing demand for SaaS. Small and medium term industries are all adapting to more digitization of their workflows, right? They're using AI, they are using SaaS products to enable what they do. So to give you a couple of examples here, we have a company like Zaggle Prepaid, which operates in the expense management industry, employee benefits, as well as the corporate gift space. This company, despite all the volatility in the IT segment, has shown a 38% revenue growth in FY24. And with India's shift happening towards digital expense management, this company expects a 20% revenue CAGR over the next 3 years. The expansion across tier 2 and tier 3 cities is helping this company. Plus, enabling a whole suite of products in what they offer is also helping them expand their base. Another example here is eClerks, which provides data analytics, data automation, back office support, and all of these services for global as well as the BFSI segment. In FY24 saw 16% growth in demand, primarily enabled by US and Europe markets. They have been focusing a lot on AI to enable the growth of their clients, and they're leveraging Gen AI in their workflows. In the mid-cap space, you might find similar stocks like First Source and NIIT, which are also seeing very robust growth in this market. Now, another big focus area after hospitals and healthcare is insurance. We expect insurance market to again be very robust in the next financial year. After COVID crisis, people have had a greater focus on term insurance as well as health insurance, and different providers have been seeing increased demand. Along with this, you have government policies like Pradhan Mantri Jeevan Jyoti Bima Yojana and Pradhan Mantri Suraksha Bima Yojana, which have enabled growth in this space and this segment. Penetration of insurance in India is 4.2%, where just the global average is 6.2%. So India definitely has a huge space to grow the insurance market. Many people expected that in the coming budget we could see actually some tax cuts on insurance that will boost this segment as well. What we really like in this space, especially the private players, obviously LIC is a huge player in this space, but many private players like HDFC Life, ICICI Prudential and all have been making big leeways in this space and have been growing their markets. Along with that, talking about tech-enabled services, Policy Bazaar is a company that has been seeing very robust growth because of the growth of the insurance markets. People come to platforms like Policy Bazaar to compare insurers and find the right policy for themselves, and this company has also been seeing increased investor interest and will continue to see that as long as the insurance market grows. Now, another big theme that has worked really well in the last 4 or 5 years is the capital market. India has seen increasing participation from households, public in the capital market. You're seeing the demat accounts, the participation in the cash segment, participation in the derivative segments reach a peak, and the capital market intermediaries are the beneficiary of this trend. The investor confidence in the capital market is increasingly robust. People expect the financial market to give them a much higher growth that will help them beat inflation. In fact, the AUM of different mutual funds in India grew at a rate of 13% year on year in FY24. And the SIP flow, in fact, has reached the highest number of 15,000 crore in a particular month in December. While the volatility in the market might be a worry for some of the newer investors, people who have made a lot of money in the market, they understand the potential of high growth from the market, the potential of investing in different set of industries or different set of funds, and this market will continue to be robust. Obviously here AMCs like the Nippon AMC, which has done incredibly well, could be key beneficiaries of these trend, but different players in this space, for example CAMS and K Fintech, which are the backend of many of the mutual funds, or example CDSL, which is the depository for most of the cash and derivative transactions in India, would be a key beneficiary of this rising and continuing trend. Now, another segment where we are seeing very high growth happen right in front of our eyes is quick commerce. You are seeing the growth of Blinkit and Zepto overtaking the traditional players at a very fast pace. India's quick commerce, in fact, is projected to reach a size of 5.5 billion by 2025, growing at a rate of 60% in this year. And this is something that you can see right in front of your eye with the growth of Blinkit, Swiggy, Instamart or Zepto. You're seeing other players like Flipkart and Amazon try to enter this space and create their space in the quick commerce segment. We're seeing more and more new announcements coming from these companies. For example, Zomato is now also focusing on events, and Blinkit has announced ambulances that will come to your house in 10 minutes. We are seeing electronics being delivered, pharmacy products being delivered in 10 minutes, and that market is expanding and changing in India. We have seen huge demand for real estate happen in the last couple of years. After COVID, the demand, especially in the premium real estate and the urban side, side has increased. But if you actually look at the market right now, what you would see is in the major cities like Mumbai and Bangalore, the inventories are at a 15-month low, which tells us that there is a huge amount of demand that is happening across these cities. Similarly, the pre-sales by large developers like Prestige and Lodha have risen 25% YOY, which tells us this industry is still growing at a very fast pace. We expect other tertiary segments, for example data centers, where there's a huge amount of real estate, or tier 2 and tier 3 real estate, where you're seeing the growth in real estate is actually outpacing the metro cities. Similarly, we think that when the interest rates are stabilized and cut in February, that will lead to even higher demand in the real estate segment. Our final sector in this space is fintech. Companies like Policy Bazaar, Paytm do incredibly well in the markets in the recent times. That is because the penetration of fintech remains robust and more new innovations are coming and improving this segment. UPI transaction value reached $200 billion in December 2024 with a 35% year-on-year growth. Even NBFCs, which are enabled by fintech players, saw a growth of 40% over the last 1 year in terms of their transaction values. So you can see the pace at which this market is expanding. This segment will also get a lot of boost with the RBI's new set of rules, which will formalize lending, which will add legitimacy to many of the activities of the digital lenders. The Indian investor, has a high demand for fintech stocks. So we expect these stocks in this exciting segment to continue to do well in 2025 as well. So this was our quick overview. We expect all of these trends to be strong in the next year and continue to do well despite any volatility that might come in. Do you think there are some other sectors which could outshine these sectors as well? Please do let us know in the comment sections, and if you liked our analysis, please do hit the like button, share it with your friends and subscribe to our channel. We'll see you again with more interesting videos in 2025. Until then, happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.